Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 5th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've talked about everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We have had a lot of economic data come out today, despite the fact that it is Monday. Usually we see a little bit of a softer day for data points, but we did get a lot of PMI, Purchasing Managers Index, data points from across the pond and here in the United States. So let's start talking about those. Spanish PMI came in line with expectations with 55.1, was expected to be 55.1. The Italian Services PMI came in at 53.3, better than the expected 51.4. French Final Services PMI slightly lower than expected at 51.6, was expected 52.6. German Final Services PMI came in at 55.1, right in line with expectations. And for the European region, came in at 53.8, in line with expectations there as well. Then Great Britain's Services PMI came in at 55.2, higher than the expected 54.2. Today we also have Fed member Dudley speaking, and the ECB President Draghi speaking as well. So all of that happening this morning as we speak. Then here in the United States, we got Final Services PMI coming in at 54.3, and the ISM non-manufacturing PMI came in at 57.2, was expected to be 55.3. That's the highest reading we've seen since October of 2015, so quite a big jump there. Then later on this afternoon, we're going to have Fed member Bullard speaking, so that could stir up the markets a little bit. But the overall markets are much higher today, with crude oil, as I talked about last week, looking to test that 52-week high, which today it did do. Traded up to 52.42, which is the new 52-week high, and just settling down back below that $52 a barrel mark right now. It is gone through, or it has gone through that value area high, so it's getting a little overextended to the upside, so we could start seeing a little bit of resistance, but we're going to have to see how that all pans out today. Gold futures falling again today, down $14 on the day, and broke below the Thursday low, which I talked about. This was going to have to be confirmed, and we'd have to wait to see what happened today. It went up, tested that 9-day moving average, and fell below it. So we are solidly in a downward trend with gold futures. And with the overall economy doing well, that is exactly what you would normally see. When the economy is doing really well, gold futures are not going to do that well also. Then the bonds down almost a half a point on the day right now. They were down a full basis point and had given up most of yesterday's or Friday's rally, but today, as we speak, down 13 ticks and at 150.03. That is going to be the line in the sand. That 150 mark seems to be a bit of contention for the bulls and the bears to battle over. Dow Jones Industrial Average, of course, has another new all-time high. This isn't just a 52-week high, but it is a historical high in the Dow Jones Industrial Average, up 90 points on the day. At right now, it's trading at 19,260. Was just 261 a second ago, but the new high historical is 19,274. So 275 should be the next new high that we probably could see anytime relatively soon. And the NASDAQ up 50 points, just blasting higher right back to the value area, the point of control, I should say, up 50 points, but right there where the most time and volume has been spent. So it's going to have that as a comfort zone. And the E-mini S&Ps also just really rallying. We haven't seen this big of a move in quite some time, and it's up 14 points on the day at 2206, so above that psychological level of 2200 that we've been kind of battling up against for the last few days. Since like Thursday, we fell below there and wasn't able to retrace that. So today we're back above that pretty nicely. Now this is the overall movement in the market. As you can see overnight, the market just really started rallying. What was the catalyst for this? Well, the referendum in Italy did not go through, and Renzi had a referendum that he was going to try and thin out the government a little bit. They actually have more bureaucracy than we do here in the United States. I think that their house or their governing bodies is like 900 people, where that's almost twice as much as what we have or more. So he was trying to thin that out to around 200 or 300, but that did not go through. So he decided to quit, and that caused a big, huge rally in the market. Now, that's not good for Italy as far as I'm concerned. They should have probably thinned some of that out. They don't have any money to pay all these government workers, and they probably should have really listened to Renzi and looked at trying to go through with that referendum, but it didn't, and the market celebrated it. Then that's about all I've done today. I am looking to cover some of my FXE. I was hoping to get some puts that I had sold against a long call spread that wasn't working out. The puts are almost worthless now. I think they're trading around 6-7 cents. I'm trying to get out of them for about 5, but the overall FXE market is pushing higher, so that's benefiting my puts. It was a little bit higher when I tried to put that trade on, so it doesn't look like I'm going to get it, but we're also getting the volatility contraction, which is helping me there on those puts. But at the end of the day, I really want this rally up closer to 105 and try and cover that gap, which is what I'm looking to have happen. But we're going to have to see how that works out. Still riding that one out. That's about it, though, for me today. I haven't really traded a whole lot, just kind of watching the market, see what happens, and getting ready for the Festival of Traders, which is going to happen tomorrow. And I'm going to be a speaker in that. There's going to be 6-7 speakers in there, and this is what this is. So you can go to tigersharktrading.com and sign up for that. As you can see, I'm going to be talking about the ultimate metric, implied volatility. If you're not using implied volatility as the major metric in your trading regimen, you are not taking full advantage of the probabilities. So we're going to talk about how you can create more consistent winners by implementing this metric into your overall trading strategy. So you can go to tigersharktrading.com, sign up for that. Tell them Pro Trader Strategies sent you, or that's how you heard about it. And then on Friday, I'm going to be doing the put diagonal webinar, which we just did the call diagonal webinar. It was a really big hit. So we're going to be doing the put diagonal webinar on Friday. All right. So go to protraderstrategies.com, sign up for that. And for tomorrow's webinar on the Festival of Traders, you can go to tigersharktrading.com. All right. If you can't take that, take it easy.